So, Jason, is it fair to sum up Cornerstone's funding structure as the equity base coming from the free cash flow of the shareholders, and then Cornerstone being able to leverage that through its commercial and investment banking partners?
That's a fair and accurate summation, Raul. Yes.
So that's how we come by the 167.
Yes.
And that capital has flowed one way. There's no flowing of dividend income from the subsidiaries up to Cornerstone to form that 167 core.
No, I've not taken into account anything that flows to Cornerstone, including dividends from the subsidiaries. It's just capital raised from around the table and from Cornerstone's banking partners locally and regionally.
Okay, all right. So that's an important point. Thanks for that. So, Ramon, so we come to the core operation of the Cornerstone crown jewel, which is Barita Investments, right? So, in the financial year to date, we saw impressive growth in the fee and commission line item for Barita. Right, I think the June numbers have it north of $2.7 billion, right? So that represents 95% year-over-year growth. So could you give us some color in terms of how that line item breaks down, and particularly what the split is between investment banking and the asset management unit?
Yeah, sure, Raul. So from very early in the post-acquisition period, post-Cornerstone's majority acquisition of Barita, we made apparent to the market through our various disclosures, we have a quarterly release, that the company is focusing on diversifying its revenue base, particularly with a tilt towards fee-oriented income. I mean, how we drive shareholder value in Barita is to focus on high margin opportunities, and naturally fee income tends to fit that bill, right? And it's no different year to date. And the fees and commissions line, as you've rightfully pointed out, has benefited predominantly from our activity on the investment banking front and on the asset management front. With respect to investment banking, which is a division that we started in December of 2018, we have continued true to what we communicated in the September 2020 APO prospectus to scale up in that area. As Jason mentioned earlier, we have been successful in funding several private and public companies in the productive sector in Jamaica and the region, and that has translated to a growth in fee income, right? Most publicly, you'd have seen in February, we were able to partner with Ramon Trading Company Limited to complete the largest raising of capital on the Jamaica Stock Exchange's junior market, right? And that's probably the most public representation year to date of what we've been doing in the investment banking field. We have been completing several transactions privately, either funding them ourselves or funding them with the help of one or two other partners. We aren't very loud about how we operate in this space, and that has really translated to the growth, or part of the growth that we've seen in fee income to date. So to put it in numbers, in the first year of our investment banking operations, we would have generated about $279 million in total fees from December 2018 to September 2019. In the second year, which is financial year 2020, we would have grown that by about 88% to $523 million for the full year 2020. Year to date, for the 9-month period to June for our financial year 2021, we've actually turned out about $691 million in direct revenue from investment banking activity. So you can see that scaling. The fact is we asked the market to give us more capacity to grow in that area in our last APO, and we've been growing. You're seeing the growth, right? On the asset management side of the business, that particular business line has benefited from, I'd say, 3 main sources of growth, right? One of them is structural, which has to do with our sales architecture. During the post-acquisition period, again, we have focused heavily on completely overhauling the sales architecture of the business. The fact is, when Cornerstone bought Barita, we had a fairly focused client service segment of our business, but we had very few salespeople. In the New Kingston office, for example, we probably had 2 people who were focusing in a full-time way on sales. We have completely overhauled that. We have segmented the approach to sales. So we actually have a retail division now, which is headed by Chad Paul Priestley in the New Kingston branch that focuses on our retail clients, on serving them, on generating business in that area. A subset of that retail unit is a digital unit. I mean, you of course, Raul, know very much about our presence in the digital space and the tools that we have put in place to drive frictionless client experiences via that lane. So we've set up a call center to improve our points of contact. And we have also digital officers who monitor our communication and client activity via our online channels. And we also have a focused and renewed institutional sales initiative, which is driven out of our treasury management unit, where we have focused on providing value add. So a 360 kind of turnkey solution to all our institutional clients here, because Barita is now well equipped to serve them on all sides: investment solutions, funding solutions, foreign currency through our Cambio. And again, we have been focusing on that. So that structural sales architecture setup has really helped us to grow customer acquisition, post-acquisition, and year to date, we've been benefiting from that. The second major factor has been the introduction of new products. So we spoke quite a bit at the top about Barita Finance, which has really launched our foray into structured finance and structured products. And that has been, particularly in the context of the pandemic, where persons are more concerned about less predictable return profiles. We have seen growth in that particular product line, which has again redounded to the benefit of our asset management fee line. And thirdly, as part of the new products that we've added, we also have bespoke portfolios and different structured portfolios that we now manage that have a different kind of fee profile. So, typically a unit trust product, for example, may have a fixed fee that the manager benefits from. We now have portfolios that we manage where if we exceed particular benchmarks or do particularly well, the manager will get a performance fee, right? And we have benefited year to date, Barita, from participating via performance fees in the returns of some of those portfolios that have benefited from the fact that we would have positioned them in undervalued assets during the height of the crisis last year, right? So it's really, again, the structural shift on the sales front, the addition of new products, and the fact that the market has recovered, quite honestly, post the worst of the effects of the pandemic on the market environment. That's really driving the fee outturn on the asset management side of the business.